Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor, speaking to you from New York City, Queens, in fact, the borough of Queens, in the middle of the COVID-19 epidemic. Nothing to brag about there, but we are well and doing well, Mrs. Taylor and I, and we hope all is the same with all of our listeners out there, that you're surviving this very unfortunate time. I do want to let you know that I'm the author of a newsletter, Jay Taylor's Gold, Energy, and Tech Stocks, and would very much like to invite you to try subscribing. Go to miningstocks.com to do so, miningstocks.com, or you can call our office in New York at 718-457-1426, 718-457-1426. Do that during normal hours, and you'll probably find someone here. I would also encourage you to consider subscribing to Chen Lin's letter, What is Chen Buying, What is Chen Selling? Chen also does a great job following the gold markets. He trades more actively than I do, but he also is doing extremely well, has for a number of years, in the biotech sector. He kind of switches off between sectors, some that looks better than others. He weighs his investments more heavily on one side or the other. He's also an energy investor, but I'm sure he's stepping on the sidelines right now, waiting for an opportune time, sometime in the future, to pick up some energy stocks. It's a bloodbath in that sector right now. But Chen, as most good investors, are ready to buy things when the time is right. So it's chenpicks.com. Go there to sign up for Chen's letter, What is Chen Buying, What is Chen Selling? We also like to remind you of Michael Oliver's letter, olivermsa.com. Michael's not with us today, but he provides ongoing information that's very, very helpful to investors to help us know whether we're in a major bull market or a major bear market, and very helpful to yours truly, which is why we have him on every other week on this show. I do want to thank all of you for listening to this show, making it one of the more popular shows on the Voice America Business Channel, and also encourage you to send along whatever comments you might have to questionsfortaylor@gmail.com, questions, the number 4, Taylor@gmail.com. And of course, we do want to thank our sponsors, because without them there would be no show. Our sponsors for this week's show are RN Resources, Ely Gold Royalties, Great Bear Resources, Hannon Metals, Irving Resources, Novo Resources, and Sitka Gold Corp. I've titled today's show, The Destructive Forces of Bank Credit. Alistair McLeod, John Williams, and Quentin Henning are my guests for today's show. Commentators routinely confuse the deflationary effects of a credit contraction, like the one we're going through now, with the inflationary effects of central bank policies designed to offset those deflationary or contraction forces. But as Alistair explains, central banks always ensure ultimately the stimulus is greater. So inflation, not deflation, is always the ultimate outcome. And we have most certainly seen a great deal of inflation, not only in living expenses, which are, in my view, far greater than our government reports, but most of all, we've seen inflation in the financial markets, where stocks and bonds have been in the greatest bull market bubble I would suggest ever seen in the United States. Alistair will help us explore the mind of a banker to help us understand the anatomy, I should say, of the credit bubble cycles and why they always end up in tears and ultimately in inflation. But as Alistair has pointed out, this current market decline is not your father's decline. It is more like your grandfather's decline of the Great Depression. It might not be unreasonable to consider this credit contraction to be more accurately described as the Greater Depression because of the unusual nature of a government-mandated shutdown, which is certainly nothing that a country described as the land of the brave and the land of the free would naturally engage in. Beyond the economic loss, the biggest losses we may be facing in the future is our freedom, which, as Ron Paul noted many years ago on this show, is all we need, really, to regain prosperity. If we are free of government control, we will be free to engage in the activities the good Lord gave us the gifts to engage in. But if we are locked down by government, we most certainly are not free, and we as a nation and as a people will ultimately perish. It will indeed be interesting to watch the outcome of Sweden following the way they're handling this Chinese virus epidemic. Sweden has informed its citizens of how to take care of themselves, but it has not imposed lockdown mandates. Now, perhaps Sweden will end up with the biggest problem of any Western country because of its laxity. Or, just perhaps, by allowing its citizens to get the disease and build up antibodies, it will be in a far better situation than the United States and most other Western countries that have, in fact, locked down and in the process destroyed their economy. Time will tell, but there is no doubt in my mind that the repressive government action here in America means that this is no longer the America that our founding fathers had in mind when they risked their lives to wrestle these lands away from King George in 1776. One very possible outcome for the current economic demise is hyperinflation and the destruction of the U.S. currency. Certainly Alasdair Macleod believes that, but also independent economist John Williams also believes the United States dollar is rapidly heading towards an inflationary demise and into the dustbin of history. I did a special interview with John Williams, which you can listen to by going to my YouTube channel. That's J. Taylor Media is the YouTube channel. Or you can go to the podcast page at jtaylormedia.com. John is predicting a negative GDP of 8% for the first quarter of this year, and between 30 and 40% negative GDP during the second quarter. I mean, these are just mind-boggling, disturbingly mind-boggling numbers. He believes that we will see jobless rates of around 22% fairly soon, and before we bottom out, somewhere around 40%. I hope and pray John is wrong, but he is an independent economist who isn't paid to say nice things, as most people are that you'll see in the mainstream media. To try to combat all of this misery, of course, our government is spending trillions of dollars, and the Fed is funding those dollars, and more than that, printing money out of nothing to save its bank shareholders, which is why Alasdair and John and others think the days of the dollar and other fiat currencies are limited, and why the price of gold is headed for the moon when measured in worthless fiat. By the way, John has provided a chart that shows the price of gold fits exactly with his adjusted inflation numbers, which is why I believe those numbers I believe are much more accurate than anything that the government provides. And in fact, on that same chart, John shows the relationship between the government's inflation numbers and the gold price, and it's way, way too low. Inflation is more like, according to John, more like 10% annually than the 2% that the government claims. And those of you who are not really truly very wealthy might have noticed prices of food going up, certainly have noticed university degrees, healthcare costs, and a whole lot of other things. Well, the government plays all kinds of games with those numbers, as John Williams will explain to a certain extent in my interview, which again you can listen to by going to the podcast page of jtaylormedia.com or at my YouTube channel, J. Taylor Media. In order to protect our wealth, I have long maintained placing savings in gold rather than fiat. That's what you should do. And on a more speculative basis, have maintained owning gold mining companies as well. Yesterday, I pre-recorded Quinton Henning, who heads up the exploration program of Irving Resources. My recording of Quinton will be played right after the break in just a few minutes from now, right after our first commercial break. Now, this morning, Irving released some assay results, and apparently the market was a bit disappointed with Irving's share price falling by nearly 9%. At least that's where it was when I first prepared to come online for the show now. One listener to this show sent me a message which stated, and I quote, "It does not look like Irving drilled into the boiling zone at the center as they told the shareholders they were going to do. Can you please ask Dr. Henning to explain what took place there and why we didn't get drill results from the boiling zone? I'm sure there is a good explanation, but at the moment it leaves us shareholders wondering why the deeper drilling we were anticipated does not seem to have taken place." Well, actually, apparently the listener didn't read the press release thoroughly, because the news release states that, in fact, the boiling zone was hit in hole number 4. Hitting the boiling zone apparently doesn't mean much to lay listeners, to lay people, because they're looking for juicy, really high-grade gold results, which they might have expected to hit in the boiling zone. But to Quinton and other geologists, they are seeing exactly the kind of rocks they need to see to keep pressing forward. You should also always keep in mind that a project is never confirmed or denied on the basis of a few drill holes. And also remember that the early drill holes were very, 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 very good. As Quentin also explained to me, they had permits to only, the locations they were permitted to drill into only allowed one drill hole into the boiling zone. And they were in the process of getting other locations, permits to drill from other locations, which will allow them more shots into these deeper boiling zone areas. Well, from my perspective, the sell-off of today really provides an opportunity to pick up some more shares, which I hope to do in the very near future.